Hey guys, Joe here from JCS-Charting. It's Tuesday the 8th of October. We're gonna run through a couple of stocks I updated recently. This is Nvidia, the daily chart. You see in blue that descending broadening wedge. I consider that as a consolidation pattern in the main trend. On the 5th of August, we were hitting our min targets of our short, and then it turned completely around. We were hitting already min targets of the green sequence, and we pulled back within that descending broadening wedge. The targets of that pattern are between $168 to $177. Within that descending broadening wedge, after that first impulse we had here, we have another consolidation pattern, which is that symmetrical triangles. They like to be used as a consolidation while price is contracting with time. The higher targets for that would be between 144 to 157. All right, this is Alphabet. On the daily basis, you see a potential inverse shoulder head shoulder pattern. Why the potential? Because we are missing one more touch here in order to trigger that pattern. We are still on the buildup of a right shoulder. The neckline runs at 170. The first target would be at 184, which is also our magnet level once that horizontal resistance breaks. Also note that this low here in September was made at 151, which was a 38.2 retracement, and it was also a pop gun down here, which popped up, and we had another one right here. So the pullback to that trigger level is not required anymore. Here you see Amazon on the weekly chart. It's a potential diamond. Why potential? Because there's that touch here on that lower trend line missing in order to call it a complete diamond. Diamonds, they like to be topping pattern, but they also can be used as a consolidation pattern in a trend, like a triangle. And as you can see, we got that confirmation here, the other confirmation here, and here somewhere between in that retracement box between 168 to 178, there should be another pullback into that box before we run up in the best case for a PG pullback. There was a PG at that top here, and we're waiting for that pullback as long as there's no new PG being built, and then that diamond becomes complete. This is Tesla on the weekly chart, and you see in red here a descending broadening wedge, which I don't like that much because that last touch here is a bit too deep for my understanding. However, there is a potential inverse shoulder head shoulder pattern here, which needs another touch on that trend line. Once that touch is being made, we open a magnet at 316 and also at 352. Note the targets for that descending broadening wedge are around here, and if the shoulder head shoulder pattern becomes triggered, it could run all the way up to $400 again. Note there's a cycle low here, the end of October, beginning of November, so that might be this pullback before we run higher again. The next one is Meter on the daily chart. We triggered here these higher sequences, the green one and the blue one, so I expect actually higher targets, probably all the way up to 711 before we run into a correction, and I doubt that we run into that wither wave wedge here, but it is a possibility after we run up that we come down very, very sharply at a meter. This is Adobe on the weekly. The next cycle low is due at the end of the year, and this is a potential flag channel we probably could run into, and since that red sequence got triggered, I assume that we actually run lower into that green buying zone. It is somewhere around 410. This is Merck & Co. on the daily basis. You see in blue that bullish wither wave wedge here, and there's a cycle low. due also at the end of the year. These projections actually want to run with the red sequence, which is in here. These are the min targets between 103 and 106. They might be hit only before we run up, or we go for the 161 at $98. Yeah, and this is NEO on the weekly. That was, by the way, an update from the 26th of July. We entered here actually that position at 427, and there was another cycle low due in summer and somewhere in August, which got made, and now you can see how that projection played out. We assume now another pullback into the next cycle low at the end of October before running higher for that green sequence. And this is Lithium Americas Corporation. I had in blue here that bullish Wilbur wave wedge. It's a weekly time frame, by the way. I noted that there's this large weekly RSI divergence. We entered a position at 231 on that day here on that was just 2 weeks ago in September. Now it played out quite well. We are already at 294, and yeah, that target line actually wants, yeah, price level somewhere around $10. Yeah, last but not least, Apple on the weekly. Here you see a so-called pop gun, which got created here last week. This chart isn't updated yet from yesterday's price action. However, if that pop gun pops to the upside, we reach our magnets at 243 and 242, which is another min target of another sequence. Note that there is a 4-year cycle and a 70-week cycle. The 70-week cycle is due next year in summer. And there is this Wilbur wave wedge here, which is bearish, but since there's a 4-year cycle, and usually these 4-year cycles, they give us declines somewhere between 30 and 40%. The last major decline was not here that mini crash we had in 2020. That was actually that sell-off we got into January 19. That was also like around 30%. Then the next one came into 32%. All these crashes before and after, there were somewhere between 17 to 20%, and I assume wherever we go up here, the next sell-off will be also like somewhere between 15 to 20% before grinding higher. Here are these min targets and the next trigger for the next sequence, and the next bigger cycle low is due somewhere in 2026. Yeah, I hope you liked and enjoyed that new format. I try to do it more regularly. So if you enjoyed this one, leave me a like or a nice comment, and I see you around. Thank you.